But most of the major wealth in the U.S. will be outside of the U.S. by then.
You say that people are pulling their money out of America. Do you have any data to support this?
Well, the data is, you see it in the price of gold bullion, for one thing. With all this talk about deflation, and when, in fact, with GDPs contracting and with economics and slowing down, you still have the price of gold doing very well. You also see currencies outside of the U.S. start to break away from the U.S. dollar and do pretty well. Currencies like New Zealand and Australia, the markets in other countries are outperforming the U.S. right now. The U.S. is snapping back a little bit, but these other countries are doing much better. You know, the Russian stock market is doing fantastically well. They've got resources, a good infrastructure, and they've got great relationships now with China and Iran and Brazil and these other countries. So they're positioning themselves into hard assets because they know that the fiat currency, U.S. dollar-based global post-World War II, IMF, World Bank, phantasmagorical world of never having to pay your debts that the world has had to suffer through since World War II is coming to a close. And once it happens, you know, you want to be on the right side of that trade.
Are you prepared to stick your neck out and say by this date will be doomsday for America, as you call it?
In the U.S., the number I would look at is the unemployment number, which is continuing to creep up. The wage number is continuing to go down on an hourly basis. And even if you want to play with the numbers on employment and unemployment, and there's a lot of ways that these statistics are cooked and they're arranged, the basic hourly wage number is continuing to deteriorate. So at some point, there will be a critical mass of unemployed people in America who will then, I think, spontaneously, as it happens in various countries, will suddenly have had it. They will have had it. They will decide that this is it. We can't take it anymore. The honeymoon of Barack Obama, it seems to be entering a new phase where people are less excited by his program of change because they don't see any change in the banking system. And the bankers are still very much pilfering and very much stealing, and they want more power. So it's tough to say exactly when that spark will hit that ignites the Hindenburg of social unrest in the U.S. But I don't think at this point I don't think you can reverse it. There's nothing that can be done to reverse this inevitable collision. And I think that also one of the amazing stories of 9/11 is how when the 9/11 disaster hit, it was really the beginning of when the wealthiest in America start to move their money out of the U.S. That was what they got from that. That's what they learned. That was their lesson, that the U.S. isn't really safe for my money anymore. And they started to move their money out of the U.S. aggressively since 9/11. A lot of the complications, and the reason why Alan Greenspan lowered interest rates down to 1% after 9/11 was in a large part to allow the wealthiest in America to assist them in moving all their capital out of America.
Tell us about this Karma Bank that you've created.
Well, Karma Bank is like, what if Gandhi and George Soros had a love child, basically. What I did was I figured out which companies, if a large boycott were enacted, would have the greatest impact on a share price. So which company's market capitalization is most weighted toward a consumer boycott and would cause the most damage. So like a company like Exxon is not particularly vulnerable to a consumer boycott because they're diversified in many ways. Their stock doesn't trade at a high multiple of the sales, of retail sales. But a company like Coca-Cola is very vulnerable to a boycott. The second turbocharged aspects to the Karma Bank methodology is that if enough people decide that they're going to boycott a product like a Coca-Cola, it will have an impact on their quarterly revenues and profits. In America, they're used to the idea of, well, if I like the company, I'll buy the stock. So this is just the opposite. I don't like the company, I'm going to boycott the stock to the point where hedge funds start selling short that stock.
Some people have called you a financial terrorist. How do you respond to that?
That would be incorrect. Okay. What I'm suggesting is not in any way can be considered financial terrorism. It can be considered economics because what I'm saying is that a lot of these companies have unrealized risk that's not reflected on their balance sheet, which is descent risk. I'm making that risk visible and by making it visible and quantifying it, it should be reflected in the stock's price. And hedge funds who work for large institutions and pension funds and endowments looking for ways to increase returns to help the people who benefit from those large institutional accounts would benefit from this approach.
Thank you very much for taking the time to talk to us.